Hi, my name's Eli Halliwell, and I'm the CEO of Hairstory. I'm creating a series of videos to help different types of hairdressers figure out how to navigate the CARES Act and specifically PPP. This video is for salon owners of commissioned salons. High level, why is it important for you to know about the PPP and what's in it? Well, the PPP is designed to basically get money flowing again in the economy. It's meant to put money back in people's pockets so they can pay for their lives and continue to spend. And so that means that it's really designed for you to be able to put money back into the pockets of your employees and your staff, the people who work on commission in your salon, and also to put money back into your pocket as well to enable you to pay for your rent and to continue to pay for your life. So what are the assumptions I've got here? I'm assuming that you have a corporate entity. I'm assuming that you have an S Corp or an LLC, that you have a payroll system that can track what you've paid to people, that you have rent that you pay or a mortgage, you have interest that you pay on a mortgage, that you pay for utilities, and that you were in business last year for the full year. And if not, then there's a workaround you can do to figure out your what your numbers are too. So the first question I know a lot of people are asking is, do you qualify for the PPP? And the answer is yes. You will not have to have any collateral. You will not have to put personal guarantee. And there's been no mention of credit checks whatsoever as well. When can you apply? You can apply as of April 3rd all the way through June 30th. How do you calculate the loan amount that you're going to apply for? Well, you're going to have to look at your payroll from last year, and you're going to need to include all the wages or forms of wages that your staff earned. So any salary you paid, any hourly pay you made, any commissions that they earned from you, plus any tips that they earned. And so that counts as compensation too. You're also going to add any state or local payroll taxes, so extra taxes on top of that, plus any benefits that you have like healthcare, vacation days, anything like that. You're going to take the entire year last year, divide it by 12 to figure out what's the average monthly total compensation. And then you're going to multiply that by 2.5. That's how you get the loan amount. So let me take you through an example. So let's say there's a commission salon that has 6 full-time stylists, 2 assistants, 1 manager, the owner. How would they come up with their number? So let's say the 6 full-time stylists earn on average, they earn $5,833 a month, which is $70,000 a year. So those 6 people combined are earning $35,000 a month. Let's say that's the cap, and it includes the payroll taxes and the benefits and everything else. $35,000 is for the stylists. Their 2 assistants, they're making $2,500 a month, so that's another $5,000, now up to $40,000. There's a manager. The manager is earning $4,000 a month, so now we're up to $44,000. And then the owner, let's say you're a hairdresser as well, you're cutting hair, you're earning $6,000 a month, and that adds an extra $6,000. So that is a total of $50,000 in monthly payroll that should be going through your payroll, but it's not just the payroll. You take that number, multiply it by 2.5, and you get $125,000. That is your loan amount. That is what you're eligible for, $125,000. So next question is, how can you spend the loan? Well, you can spend it any way you want. But if you want to have a large portion of the loan forgiven, which I would, then you have to spend on specific things. In particular, the main focus is payroll. So you're gonna pay people what they would have earned if they had been working. You're gonna also pay your rent. That's an allowable expense as well. You're gonna pay the interest on your mortgage, and you can pay for your utilities. So those are the 4 big categories of payments that you can make. The expenses and the way it's going to work is that once you get the loan, you have 8 weeks to spend the money. And so they want the money to get out quickly. You can't hold on to it. So you have 8 weeks, and only spending that happens during that 8-week period is going to be eligible for forgiveness. So let's go through an example. Oh, one other point. If you fired people or they went on unemployment, you have until April 26th to rehire them and start giving them money to count towards the forgiveness of this loan. So I believe that you'll be able to pay them more than unemployment would. And so that would be a good idea. So let's use an example. Your 2 months of payroll, it was $50,000 a month. And so 2 months is $100,000 of payroll. That will count as being forgivable. You have 2 months of rent. I'm assuming, let's call it $4,000 a month of rent. So that's $8,000 more. You've got 2 months of utilities. Let's say it's $1,000 a month of utilities. That's another $2,000. So the forgivable portion of the loan is now $110,000. You took out a loan for $125,000, so you have $15,000 that is not being offset and not being forgiven. So how does that work? Well, that becomes a normal loan. So you've got a loan from the government for $15,000. It's actually from the bank, the SBA, but it's backed by the government. And you won't have to pay any payments on it for 6 months. Thereafter, you'll have to pay some interest. It's not clear to me whether it's 1% or 4%, but it's a low interest rate. And the loan is going to be due in full within 2 years. So there's no prepayment penalty as well. And so a lot of people are going to say, like, okay, I don't need to have this loan. I'm just going to pay the rest of it off. You've got $110,000 of free money that you use to pay for your life, for your hairdressers' lives, and you just gave back the rest. So you're going to have to make some certifications and show some documentation. You're going to need to document your payroll expenses, have some way of showing that you actually had those payroll expenses. You will need to have those expenses align in general with what you file with the IRS for your taxes every year. So you can't have one number here and one number here, and they're going to look at them and make sure that they make sense. You're going to need to certify that you actually are experiencing hardship because of the coronavirus shutdown. I think everyone will. You're going to need to document how you spend the money. So you're going to need to document the payroll that you spend, the rent that you spend, and the utilities that you spend. And the key here is that you can't lie. If you lie, you're going to be breaking a law and they're going to come after you. So do not lie. It's not worth it. There are some questions out there about other types of SBA loans. There's the EIDL. The main benefit of the PPP loans is that they are forgivable. And I think that's a massive benefit. So the other loans have a small portion. The EIDL has a small portion that's a grant, but nowhere near as much is forgivable. I think that the PPP is a great way to go. And clearly you want to talk to your accountant or your banker to validate that. I think that the last thing I'd like to say is that if you have any more questions, you want more information, please come to the online forum we've created called The Break Room. I'm going to put the URL down here, but I'll tell you what it is. It's the-break-room.mn.co/feed. And we're going to be posting this video there along with lots of other documents we've already posted. We want to help. And our mantra is that we're not going to let any hairdressers be left behind during this COVID crisis. Thank you very much. Bye-bye.